Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be starting off fresh with this indicator based on the linear regression. This is the linear regression intercept, and this is calculated using the linear regression technique, and we can utilize it as a identifier of the trend as well as of the overbought or oversold conditions. So in today's setup, we are actually utilizing it as a both as a guidance factor on the larger time frame of 4 hours, and then whenever the price get overextended and whenever there is a possibility of reversal happening, we will be try to exploit that conditions utilizing the combination of these hourly and the 4 hourly time frame. So we get started on that journey. Before the starting of the journey, here is a standard disclaimer, kind of reminder that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months, maybe even years, and also run it on the demo accounts to get a clear-cut idea of the efficacy of the said algorithm. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get back to the charting to see what we are trying to do in today's session. Till yesterday, we were working with the tricks and the TSF, the time series forecast, and now this intercept, it's bit similar, not exactly similar to the time series forecast. The time series forecast also runs pretty close to the price action, and in case of intercept, it also tries to follow it closely, but not that closely, and sometimes there is a large deviation between the price action and the linear intercept, and that is the marker for a overextended condition. Now coming to the 4 hourly chart, we are simply utilizing as a indicator of the trend, and the assumption is fairly simple. Whenever after being overextended, whenever the price crosses above this linear regression intercept, we will be considering it as a bullish reversal, and as long as the price is in this territory above this linear regression intercept, we will be looking for the buy trades utilizing the hourly framework, and after the crossover below this, whenever the price action crosses below this linear intercept, and as long as it remains below it, we will be looking for short sale trades. But as you can see, sometimes it is not that easy to gauge the trend. Maybe the price action might be in a consolidation zone, and it does this sideways movement when it is fairly range bound, and there is no more, not much of an directional momentum, and it simply hovers in a tight range, and then during such scenarios, during such periods of time, these frequent crossovers on the bullish side, on the bearish side tend to happen, and there is not much we can do. But what we can do is again get the validation on the lower time frame chart for the same thing. So we have multiple validation for the same thing on a different time frame. Suppose now the 4 hourly chart is saying that we can look for a buy trade, then we turn our attention to the hourly trade, and if there is a similar validation, then only we will look for a fresh trade. So that is the framework for us to go for a new trade. So now what we will do is we shift our attention to the hourly chart and see what we are trying to achieve. Now just let me get a buy trade example. So as you can see in today's session, since almost 13 GMT of 9 June, the price action is in a buy mode, and now it is 11th of June. So here we have fairly good idea that 13 GMT is somewhere here, and after that the price action has remained in a buy side of the trade. Now, if we are going to go for a fresh buy trade, then we need some correction to have already happened, and only then we will be going in for a buy trade. Now, as you can see, we got the confirmation here, but then there has not much of an correction and then consolidation as is the requirement for our setup. So to get the setup right, we will need the last hourly close to have just happened above this linear regression intercept, but 4 hours prior to that, all the candle closes should have been below that linear regression intercept. So here, for example, here you can see that 4 hours have closed below this linear regression intercepts, and suppose if this hours candle close happens to be above this linear regression intercept, then the new trade will happen, new buy trade will be opened, and that way we will have this correction. Here the euro USD had gone into a correction phase, and then after making this low, it is again trying to get back on the long side, and it is starting to rise, and since the momentum is strong, provided the condition of the intercept is also fulfilled, we can indeed look for a buy trade, and that is the scenario we are planning for. So since we have got the 4 hourly confirmation, we didn't really get many opportunities, and now it is looking like, suppose if this candle close happens above this linear intercept, then our trading conditions would be fulfilled, and buy trade can be executed, and vice versa for the sell trade. We will need the 4 hourly conditions to have been in the sell territory, bearish territory. So here, starting from 13 GMT of 8 June for a day, we had these conditions for favorable for a sell trade. So now let us look the 8 GMT, sorry, 8 June, 13 GMT. So the time is somewhere here, and as I said, we need to look for the combination of 5 hours where the last candle close is below the linear regression intercept, whereas the prior 4 candles, hourly candles, have closed above linear regression intercept. So somewhere here, the conditions would be fulfilled, that is 1 GMT of 9 June, and here as you can notice, the 4 prior candles have closed above intercept, and then it is below, and as we are going in for a market open, provided the 1 minute conditions are also fulfilled, we will be going in for a trade here, and then it indeed goes into profit for up to 50-60 pips, but then we will have to also determine the stop loss and the target ratio as per our convenience. So we will do that as is the customary practice, utilizing ATR setup. Maybe this time around we will take into account the daily ATR range, and then accordingly we will get the ratio right. So here now we go to the Visual JForex platform where we do our algorithm work. So first thing first, we will need to do the instrument subscription, and in the instrument subscription we will need to get the blocks info and logical. Okay, so we got this, and we are going to need a lot of indicators and then it blocks, as we are looking at lot of historical data, so we will need to make it fairly extensive so that we don't really miss out or misinterpret any price action signal. So here we will also do this on candle start point, and when we are doing it on candle, it is a lot easier to test it for extended period of time. So first we need to get is default variable, default instrument, And now we have got the default instrument here. Next thing is on candle, last beat candle, last candle, anything you can take. Let us take beat candle. And the beat candle instrument should be the Euro USD, and to define that condition we now have to make sure that is the case, and to do that we take this second condition very seriously. And where is the Euro USD? We have to hard code it just to make sure that unintended trading doesn't happen. So here, oops, this is kind of a headache. Oh, okay, we got it. Now last bit candle should be equal to default instrument, and we'll need to color code this as well just to make sure that the flow is happening. So here we have got this. All right, now the position amount needs to be defined at 0, position info count, so here position amount, and here comes 0. Okay, so regardless of being a pending open or a market open, if there is any order in the system, no fresh order will be initiated, so only one trade will happen at one point in time. So here we now shift our attention to the linear regression intercept, and here we will need to define it on the 4-hourly time frame. So we get this, we make it 4 hours, and this should be shift 1. Okay, then we get a historical candle of 4 hours. So again here we need to look at the info, and here we get the historical candle, and that is so here we have get historical candle. So we got this. We will compare this candle closing. It needs to be changed to shift 1. So here it is. Then we will compare this candle's closing shift 1 with the linear regression intercept of 4 hours, and as I said, the direction of the trade buy or sell will be dependent on this condition. And then next thing is we need to look at the hourly setup, and for that we are going to take into account the linear regression intercept values for last 5 hours actually, and then we will be doing the comparison. So here it comes 1, 2, 3, 4, and this is 5th. So here we got this 5 linear regression intercept candles defined at 1 hour. We are yet to define it. We need to define it at 1 hour each. Okay. So we join the dots. Now this needs to be of 1 hour each, so we change 1 hour hourly. Here also hourly. All these 5 candles will need to be changed to hourly. This one as well. So here we got this. Now it needs to be defined for look back period, and that is starting from 1 to 5. Oops, 1 is fine. Sorry, I think I overlooked this. This time period factor, that is 14. We keep as it is the default value, and here it needs to be changed actually. So this is 1. This is going to be 2, 3, 4, and here comes 5. So here we will have these linear regression intercept values for last 5 hours. For each hour we will be looking at whether the candle closing level for that hour was higher or lower than these intercept values. So here we have line 16, 17, line 18, line 19, and line 20. Now is the time to bring in the equal number of hourly historical candle data. So we go back to the info components and we get 5 historical candles. So and then we define them for 1 hour each. So here comes 1, candle 21, candle 22, second, candle 23, third, candle 24, fourth, and here is fifth, candle 25. Okay, so here we are defining this condition for historical candles, and we now need to change this candle period to 1 hour hourly. Okay, for this one as well, hourly. And here we have to now shift our attention to the shift itself. Here also we need to define this shift 1, shift 2, shift 3, shift 4, and shift 5. So here we have got this 5 historical candles which will need to be compared with the respective linear regression intercept values. So here it has been well defined, and now for our entry and exit purpose, we will need the historical candles of 1 minute, and before that we will also need to take into consideration the ATR for calculating the stop loss and the target price. So I think we will need to, this time around we will define it as per the daily time frame, as hourly sometime tends to be volatile. You can do hourly as well, but for this particular setup we are going to define it at the hourly time frame. So we now make this change here. 10 minutes needs to be converted to daily, and since we are going to take into account yesterday's value, not today's value, so we will get the shift 1, and then comes the line 26, that is the output, which we will multiply by the desired variable, desired factor to get the desired combination. Right now what we do is we get another 2 historical candles and we define them at 1 minute each. Then we will be comparing these values to the last hour's candle close, and we will go in for a fresh trade at the market prices. So here we take get historical candle, and then so here this is candle 28 and this is 27. For the ease of naming, we keep candle 27 first and candle 28 second, and then we join the dots. So here Now we change this to 1 minute, as I said, 1 minute. This also 1 minute, and shift needs to be converted to 1 and 2. So this will be last minute's candle, and then the candle prior to that, the penultimate candle, defined for 1 minute each. So here we have this bare bone structure ready now, and in tomorrow's session we will need to do further calculation, then do the optimization. But for today's session we wrap up this build now, and we will be back tomorrow, and then we will start to build on the work we have done so far. Thank you all for joining in. Have a fabulous day ahead. See you tomorrow. Goodbye.